Please welcome to the stage our next keynote speaker, Nigel Morris, Managing Partner of QED Investors. Nigel will be interviewed by Fintech Meetup's Sanjib Kalita.
All right. Thank you. Thank you, Nigel. Really excited to have you here. Really excited to be interviewing you. Actually, to start off, just a little bit about myself. I moved around a lot while growing up. In fact, I lived in 11 different places before even graduating from high school. I believe that you've moved around quite a bit while growing up as well.
Yeah, my dad was in the British Army. So we lived in Germany, we lived in Kenya, we lived in Northern Ireland. And wherever I was, I always seemed to have the wrong accent. And I always was supporting the wrong football team. So I learned how to be a chameleon, I think, for survival purposes. But it was always a challenge because I always felt like we never put real roots down. And the irony of it is that I've lived in Northern Virginia now since 1985. Oh, wow. So after all that tumultuous moving around, I've made Alexandria home for nearly 40 years.
And I actually, for me as well, that made me very adaptable. And I think the other thing it did is that it made me optimistic about being in uncertainty and new situations. Like, did you have a similar kind of a...
It's an interesting thing because so much about being either an entrepreneur or a venture capitalist is that you live in a world of massively incomplete information. And you're constantly trying to extract as much signal as you can out of such little data. So yeah, I think you learn how to be comfortable in an unstructured environment and dealing with uncertainty. So yeah, I think, I find myself when things look like they are too, structured, regimented, figured out, I find myself yearning for something that's more open-ended, and/or I go and try and break things and make them better. So yes, I think that's very deep in me now.
I can relate to that. And actually, yesterday when I was flying in from Dulles Airport, I went to the Capital One Lounge.
How did you?
and I told the folks behind the counter that, can I take a photo here because I'm going to interview the founder of Capital One tomorrow. And I think they thought I was crazy. But, going back to when you founded Capital One and now, like, what are some of the biggest differences in the banking industry, and sort of what is the state of banking at the moment?
Yeah, look, I've been really lucky in life. I mean, coming out of business school in 1985, I worked in strategy consulting where I did banking. And then I went to Signet Bank, who were a client, and ran the credit card business with Rich Fairbank. And then we went to Capital One, where we ran the credit card business and built it up for 11 years. And then the last 17 years have been running QED, doing Fintech. So I've done Fintech and banking for 40 years, but through 4 very, very different viewpoints. And I think that's a pretty unique perspective on the world. What has changed? So much has changed, and yet so little has changed. So in 1985, the idea of using massive amounts of data to be able to predict credit risk or to be able to predict response rate, the information-based strategy that Capital One pioneered was incredibly unique. And I think we saw so many people attempt to copy it. Today, still, Capital One leads in its capability in terms of consumer credit. And then you saw the power in the Capital One days of culture. Culture eats strategy for breakfast. It's getting the right people and putting them in the right roles and giving them the right responsibility and encouraging them and supporting them in the right way. That has not changed. Now, if we run the clock, we've seen that banking has gone through ups and downs and many cycles since 1985. But if we look at the deployment of AI, it really is just advanced statistics. And the groundwork for that was built in 1985. And the cultures that will allow AI to be able to be deployed to the point where it is alchemy, and I've seen it in action, it is absolutely jaw-dropping in the hands of the right people. That is about culture. So it was really fun. I've not been to Dulles Airport.
Yeah.
I'm not sure if they'll let me in now, but it'll be good to see the Capital One brand. I've been to the Capital One cafes, of course.
Okay, well, I'm sure they'll let you in there, no doubt. Um, and another piece, Capital One has also been in the news recently because, well, I'd say the last year or so, because of the potential Discover
Oh, yes.
merger. You know, and it looks like with the new administration, like that, until it's done, it's not done, but it looks like it might happen. Any thoughts or comments on that?
Oh, this is such a fascinating one. I was in Mexico City just over a year ago when the news broke of Capital One buying Discover, and I reached out to Rich Fairbank, my old partner, who's now running Capital One, and we talked about how, you know, Capital One was born in 1994 as a public company 30 years ago, and how now 30 years later, Capital One is on the brink of being the largest credit card issuer in the world. And you know, it was Rich and I, two, reformed strategy consultants with a dream. And to me, what it says that entrepreneurs can create huge things. And everybody will shout at you about why it can't be done. There'll be naysayers, what about this and what about that? But you know, the passion and energy to build something out of the ground is a wonderful thing, and it can lead to great outcomes. So, you know, it was really amazing to see that emerge. I think it's the capstone of Rich Fairbank's career, to be honest. I think it is a masterstroke. Capital One's analytical sophistication leveled against Discover's customer base will be enormous. Discover had got themselves into various pickles with the regulators. Capital One learned, partly because of proximity, but learned over the last 20, 30 years to be really good at managing the regulatory side. So until the last week, I would have said to you, it's a slam dunk and this is about to happen. But I don't know if any of you saw that the Trump organization is now suing Capital One for wokeism and taking away Trump establishment bank accounts after January 6th. So we'll see how that all plays out. I'm sure there'll be lots of people playing poker with each other around the table. But yes, I think inevitably, Discover and Capital One is a powerful capability, and I think there'll be huge value for customers, merchants, and for consumers.
And another bank that is sort of bringing new capabilities and potential, actually is not in the US, but in Brazil, Nubank. And Nubank is a company that you actually invested in. What is about Nubank that makes it such an interesting business?
Nubank, we invested in Nubank very, very early in their life. It must have been 10 years ago. For those of you who don't know Nubank, Nubank has a market cap that rivals Capital One. I think it's the largest market cap now in Brazil. It has a relationship with 52% of Brazilian households. And is growing at a very rapid rate with an incredible ROE. What is special about Nubank is Capital 2 in oh so many ways. It took the design and the methodology that was quintessentially Capital One, and it tailored it to the Brazilian market. And the Brazilian market was wide open for disruption. The banks there had 25% return on equity, huge profitability, and were really enjoying the inertia. One of the things about banks that I often say is that banks have a tendency to confuse inertia with loyalty. They're very, very different things. And as open banking very, very gradually in this country starts to make a difference, we will see more and more less friction, and consumers will be able to move from commodity A to commodity B. And that inertia will break down through time. But what is special about Nubank is they had a brilliant strategy. They have executed it fantastically. There's a lot of friends of mine that work at Nubank, and when I ask them what is special, I'll give you one inside perspective. They said velocity. Banks do things in years that we do in months. Banks do things in quarters that we do in days. So the focus, and this is so much part of the playbook of entrepreneurism and small venture firms, is that you have very limited resources, you don't have much oxygen, you have to move Pareto optimization with incredible alacrity. And what Nubank has done that's very special is that they've maintained that culture of velocity all the way through size. And that is always a challenge. As you get bigger and bigger, there's a gravitational pull that turns you into more of a professional institution of such. But Nubank are very special. They've gone from credit cards to a broad range of financial service products, which is always devilishly difficult. They've conquering Mexico and Colombia and have aspirations for other geographies. Certainly one to watch, Nubank.
Yeah, that's amazing, and I think there's so many quotes there that I love the confusing inertia for loyalty.
You like that, yeah.
I also really love your comment about the years and months and the velocity. In general, like fintech is known for velocity and for being able to move fast. How would you describe the current state of fintech?
It's been through the wars. 4 years ago, about now, we were really in the throes of COVID. You remember when we were all looking for masks and disinfecting door handles and wondering when the vaccine was going to be? It's only 4 years ago, but how quickly we forget. But what happened is fintech was gaining share across with banks. It was doing very well. There was Square and Stripe and Klarna and other companies. And then what happened is COVID hit. And when COVID hit, there was a step function toward digitalization. Now, nearly every fintech is totally digital. And that meant that people did not want to queue up in the bank line at Bank of America or at Western Union, and they looked for digital alternatives. So the shift from analog to digital was massively accelerated. And when that happened, the big private equity firms and the hedge funds saw that happen, and they bid up the value of the fintechs, mostly not linked to their underlying core value at all. Revenue multiples for fintechs before COVID were about 4 times. At the height, at the end of 2021, they hit 20 times. And then over the last 3 years, they've come back down to 4 and 5. So that, I call that, incredible violence inherent in the system, that you have that amount of volatility. And the people that bid up the investments 4 years ago disappeared. They went off to chase yield somewhere else. But it caused a huge amount of impact, waves of issues that went through fintech. That now has moved through the process. Our companies have gone through a period of tremendous austerity, and now are coming out with and now starting to grow again and grow sure-footedly with a focus on unit economics and net promoter scores and product market fit. One thing that I always go back to, it comes back to a study that we did with the Boston Consulting Group last year. Worldwide financial service revenue is $14 trillion. If you add up the revenue from all of the fintechs, every single one of them, it's $320 billion. And you don't have to be a Boston Consulting Group analyst to do that in your head. It's less than 3%. Fintech is less than 3% of worldwide financial service revenues. 10 years from now, it's going to be 10%. Fintechs are growing share at a very, very rapid rate. And they are, in the areas where they're competing, they are winning. Notwithstanding that the banks have certain advantages, for sure. The second thing is if you look at the Net Promoter Score as a measure, a litmus test of product market fit, value to a consumer or a small business, we see fintechs that have got Net Promoter Scores in the 90s. For those of you who measure your Net Promoter Score, you know how hard it is to get to 90. If you get to 80, it's fantastic. And 70 is really good too. The average Net Promoter Score for a bank in the United States is 23. And they're the ones who tell you what the score is. Many of them don't even measure it, and some of them measure it and are not keen on telling anybody about it. But the difference between an 80 and a 23 is dramatic in terms of the customer experience. So although I clearly have a dog in the race here, because I passionately believe that fintech levels the playing field. We're just at the beginning of a massive revolution. I'll give you one thought. I gave a talk a year ago, and somebody said, what do you think the next chapter of fintech is going to be? And I talked about stable coins, I talked about cross-border, I talked about embedded finance. And what I didn't really talk about then, which is so different in the last 12 months and I think this is very worth underscoring, is how quickly and at scale the fintechs are adopting AI. I saw a study the other day that said 16% of banks in America, by the way, there are 4,500 of them, 16% are testing AI. Every one of our 200 companies that we have in our portfolio is not only testing, but the vast majority of them are rolling it out. So if you look at this, the abilities for fintechs to take advantage of an insight or a technology and then massively roll it out is, I think, the advantage that they have.
And jumping off of that AI comment, one of the challenges that we have on the agenda is when we want to put on AI, we want to show something that's real, not something that's like done in the back office. Like, where is the dam breaking in terms of AI?
What a great question. It's breaking in 3 places in living color. One is the writing of code. So we see Copilot, we see Claude, some of these tools where 80, 90% of code now can be written by a machine, by somebody who's no more gifted than me, actually giving instructions. Then very experienced and clever engineers can go on top of that. That speeds things up and reduces costs massively, 1. 2, any kind of digital interaction with the consumer, where we're now starting to see these bots be rolled out, where they are faster, more consistent, and lower cost, and are immutably auditable vis-a-vis human beings. And I've seen off-the-shelf AI take this digital data and in a period of only a few weeks move to beta testing and then to roll out, massively reducing costs. You're all familiar with the Klarna example that Sebastian talks about. The third area, which I think is the most, in some ways in the long run, what will be the most powerful, it's the ability to be able to tailor message to be able to get to an objective that you care the most about. What does that mean? In the Capital One days, we used to boast that we were able to tailor the right product to the right customer at the right time, the right price. But you know what? We were doing it by direct mail in the early days. Now you have the ability, which was very hard to tailor down to the individual. Now with AI and the ability to be able to take all this data, synthesize it, test different A/B tests in real time, and then optimize individual tailored message to an individual consumer that will elicit the thing that you care about the most, the objective function, say response rate or reducing attrition or collections. And I think that area is going to be substantially improve productivity. So don't test AI at your own peril, I think is the message.
And you mentioned Klarna using AI, and Klarna, which has been in the headlines. Another reason that Klarna has been in the headlines is the IPO market. Can you talk a little bit about your thoughts on the IPO market?
Isn't this an interesting one? In 2021, there were 61 fintech IPOs. And 5 of them were QED portfolio companies there, which were SoFi, Avid Exchange, Flywire, Nubank, and Remitly. 5 of them. Since 2021, there's been a total of 13. So there really haven't been a lot of IPOs. But now we have a cohort of companies that are at scale, that are profitable, that are growing fast, that have business models that make sense. Klarna being one of them, Circle, you may know of, eToro are out there, and a number of others where there's been talk about them putting their S1s out there. And I think that notwithstanding the turbulence in the equity markets this week and today, I don't know if any of you checked your 401ks today, and the Dow was off 1,000 points. But there's no doubt that these companies are IPO ready, and it'll be the right window either at the end of this quarter or into next quarter that we'll see a whole generation of them. And with that, there'll be a wave of valuations that are market tested that will flow through people's venture capital portfolios like mine. But I think these are really powerful and capable companies.
And we're getting towards the end of our time here. Are there any final thoughts that you feel that that might be helpful for the audience?
I think the Capital One story says that from small acorns, giant oak trees can grow. The banks told Rich Fairbank and Nigel Morris in 1987 and 88 when we were talking to them that what we were talking about doing the credit card, how to do the credit card business better. They said, one, it can't be done. And two, if it can be done, it can't be done by you two clowns. And the power of entrepreneurism to change and make a difference in this world. Fintech levels the playing field. Fintech empowers consumers and small businesses. Fintech takes away the power hegemony between incumbent and individual. Fintech creates transparency, net promoter scores to die for. And one thing that I say to my team all the time, and you can see how old and gray I am, before I call it a day, I want QED's companies to have made the difference in the lives of 1 billion people around the planet. So I've got Klarna, I've got Nubank, I've got Remitly, I've got a whole series, I've got Capital One. If you add all those up, I can get to about 400 million. For me to get to my billion, I've got to crack the code in Brazil, in Indonesia, in Nigeria, in India. And what I'm hell-bent on taking the ideas and things that we've learned now over nearly 40 years and be able to create that more level playing field in these developing markets, because there's so much opportunity.
Well, thank you so much, Nigel. Thank you for making an impact in the world. Thank you for making an impact in the industry. And everyone, please, let's thank Nigel.
Thank you.